Hey everyone, it's Zach Beck. If you've been watching your savings account recently, you may have noticed that your interest rates have been dropping. Now what happens here is that our interest rates are affected by various things, such as the economy and competing interest rates amongst other banks. But the main contributing factor to your interest rate is due to the Federal Reserve, or AKA the Fed. And what has happened is several times over the last year, the Federal Reserve has decided to cut rates due to issues that are transpiring in the economy, specifically due to the pandemic that struck the United States of America starting around March of 2020. Our country's central bank can change the federal funds rate when it comes to lending to banks, and this change occurs at what are called the Federal Open Market Committee meetings, or the FOMC meetings, that transpire multiple times over the course of the year. And typically, the Fed may decide to lower the federal rates to stimulate the economy. So what I want to do in this video is talk about the recent rate cuts that have happened in our country, how those rates are affecting you, but most importantly, how you can position yourself by strategically placing your money into proper accounts to make sure you have actually some positive gains over time and you come out the other side of this pandemic ahead. So let's jump into it right now. When federal funds rates go down, it may be cheaper to borrow money for a mortgage, a car loan, or even for using your credit card. However, the downside is it has a disproportionate impact on your checking account, your savings account, your high interest accounts, your money market accounts, and even your certificates of deposit. As previously mentioned, since July of 2019, the Fed has dropped federal funds rates several times, including dramatic cut to near zero in March of 2020. Since then, the rate has stayed low and may continue to do so, as the Federal Reserve anticipates that the recovery is going to take a much longer time for us to get to a place where interest rates could be increased. In response to these rate cuts, many banks have actually slashed their rates on their high-yield savings accounts. According to a new report from Deposit Accounts, many online banks have lowered their rates to around 1%, which is a far cry from the 2% it was that we just had last summer. And let's be clear, a high-interest savings account are still offering more than the 0.06% that is offered by your standard bank savings account, but it definitely has an impact when we've seen these cuts coming in from the Federal Reserve. So what I want to share with you right now is how you can position yourself to place your money strategically into various accounts that hopefully will yield something more substantial than just 1%. I want to be very clear that high-yield savings accounts are still offering more than the 0.06% that is the national average of what happens when you get your money placed into your savings account at your normal bank. But unless you're chasing a sign-up bonus offer, it may be worthwhile to explore all of your options when it comes to the best rate you can find right now. Alright, so now you want to find a way to place your money strategically into various accounts. The first one you do want to look at are high-yield online savings accounts. There are various options out there. You can look at places like Wealthfront, you can look at Fidelity, you can look at Discover, you can look at all these various banks that offer very high-interest savings accounts. But what you're going to notice is that right now the interest rates are still going to be relatively low compared to just where they were a year ago. However, they are going to be higher than the 0.06 national average. So my encouragement is to shop around. The biggest things that you want to look at when you're actually looking for a high-yield online savings account is making sure that they have a low minimum deposit and that they have no monthly fees. In a similar vein to high-yield savings accounts, you also want to look at high-yield checking accounts. While checking accounts aren't usually known for high interest rates, there still may be some high-yield options that you can find. These high-yield checking accounts generally tend to be available at credit unions. These accounts may have some requirements though, like swiping your debit card a certain number of times a month. So you really want to take a look at all the details and fine print when it comes to finding a high-yield checking account. Another thing you want to look at are certificates of deposit. Now, certificates of deposit, also known as CDs, have also taken a hit. However, there are still 12-month options that are available out there that are above 1%. But if you may need access to the money in a more soon manner than just 12 months, you really want to avoid looking at a CD unless you're going for maybe a 6-month option, but generally your interest rate is going to be lower for something like that. Now we know that there are various options out there, whether that's a high-yield savings account, a high-yield checking account, or a certificate of deposit. But what I want to do is give you 3 quick steps that you can do right now to try and find the best solution for yourself. Number 1, shop around. Earning additional interest could be important if you're trying to meet a specific savings goal. To earn as much interest as possible as rates fall, it's best to comparison shop to ensure you're getting a good deal. Now, after scouring the internet, looking at various online banks and doing everything I can to try and do some research for you, the best rates I could find was 1.5% for a high yield savings account, and that's much better than what you're going to find compared to the national average. Now, if you have a lot of money to save, this is something you might want to consider doing at this time, because if you're placing your money into a high yield savings account, it's going to compound and grow over time and just be basically a hedge against what's happening in the market. So I would encourage you to look at doing that. So you can go online, do some research. If you have any questions about it, please give me a comment down below and I'd be happy to share that with you. Generally speaking, some of the best interest rates that you can find right now are on online banks. And the reason for this is that they are very competitive. They don't have some of the same overhead as physical branch locations do, and yet they are still FDIC insured, so they're safe places to place your money. But you really want to take your time to do your research. So what I would encourage you to do is just be mindful of the fact that interest rates are going to continue to change. They're going to continue to evolve and shift specifically as the economy is going. But if you take your time and locate an interest rate, it's okay to move your money over there. I've done that personally. Yeah, like I said before, I use places like Wealthfront, Discover Bank. There are other places online where you can get good yields right now relative to what is happening at your national average. So overall, just do your research, shop around, and find what places offer the best solution for yourself. In addition to comparing interest rates, you can also look at certain banks that give you specific interest rate for a specific amount of time. Banks like Ally Bank, CIT Bank, Citizens Access, Investors E-Access, Marcus by Goldman Sachs, and PurePoint Financial, for example, offer no penalty CDs with yields guaranteed for about 1 year or less. So there are some options out there. You just got to be creative at this very time. And really the most important thing is that you are still saving money during this time. You want to make sure that you're still following all the principles of your financial plan, where you're placing money into your retirement account, your savings account, you're making sure that you're covering all of your expenses, paying down your credit card debt, doing everything you can to remain whole during this challenging time, but then finding strategic ways where you can actually have your money grow over time so that you're outpacing inflation. The second thing you want to consider when it comes to looking at the way to navigate through this challenging interest rate time is to consider laddering your CDs. Now, laddering CDs is a strategy that can be worth considering for savers who are hoping to insulate themselves as interest rates fall. When you ladder a CD, in essence what you are doing is you're buying multiple CDs that mature at different intervals, like buying 1, 2, and 3 year CDs at the same time. So as each CD comes due, you'll have money to use and reinvest. You'll also be locking yourself into yields that may be higher than the ones offered as banks reduce the CDs as the interest rates continue to fall throughout the economy due to what the Federal Reserve is continuing to do. The third step you want to take when it comes to navigating these low interest rates is stay focused on your savings needs and your saving goals, because even as rates fall, sticking to your original savings and investment strategy is essential. Your financial decisions should depend upon your personal goals. They shouldn't change dramatically just because interest rates have fallen or because the economy has shifted. So what you want to do during this time is make sure that you're sticking to your original plan. If you have a long-term objective, such as buying a house, getting a new car, maybe getting an engagement ring, being able to go travel again, do some things like that. Whatever your goals are, make sure that your financial strategy aligns with that perspective. And as long as you're doing your due diligence, researching and processing different online bank options that exist out there, getting the highest yield savings account, the highest yield checking account, maybe utilizing a CD if that works for you in this particular moment due to the timing that you have to reach your goals, I think you're going to be okay. But it's just going to require diligence and an approach of understanding that although we are actually experiencing a pretty dramatic shift in our economy right now with very low interest rates, a bit of economic uncertainty, high unemployment, and the market is a little bit uncertain at this time, it's okay because we're going to get through it. You're going to get through it as long as you remain diligent and focused on your strategy and adjusting as you need. But really, your adjustments shouldn't be substantial or dramatic, like you shouldn't start putting money in your mattress or anything like that. But what you should do is just try and find the most strategic places to allocate your finances right now to help you achieve your long-term goals. With all that being said, I'd like to thank you for taking the time to watch the video today. If you wouldn't mind, please like the video. It would actually really help the channel out for the YouTube algorithm, help push this video to other people who might need to hear a message like this. Because you might be going through a difficult time right now financially, but also you might have other people, friends and family members who are going through similar challenges, and they're looking for the best ways possible for them to allocate their finances to help them achieve their goals. And hopefully these little approaches they can take, these strategies they can employ, will help them make some more money and ultimately achieve those goals. Furthermore, if you have any questions, please comment down below. I'd love to answer any questions for you, do additional research for you, and try and help you achieve your personal goals. So feel free to comment at your discretion. And lastly, if you wouldn't mind subscribing to the channel, it would actually mean a lot to myself personally. Put a lot of time and effort into looking up these videos, wanting to produce content that is meaningful and impactful, and hopefully makes a positive impact in your life. So if you subscribe to the channel, you'll get to see the videos that I post, which I do on a weekly basis. And I try to cover a variety of topics, specifically focused on personal finance, but also I'll delve into other things like strategic planning, career development, personal development, relationships, and even occasionally discussing politics if you're interested in that. And with all that being said, I just really want to thank you for taking the time once again to watch the video today. I hope you have a wonderful remainder of your day. And if you do subscribe to the channel, please tap the notification bell. That will notify you the next time that I post a video. I hope you have a great day, and I'll see you next time.